The NASDAQ 100 is enjoying a torrid start to the year as short positions are stacking up. What is the prediction for this index for this year during an economy with interest rate hikes on the way? My name is Connor, I'm the Senior Market Analyst at the global brokerage firm Zenfinex. I provide forecasts on various different markets on this channel on most trading days. And if you enjoy them, make sure you hit that thumbs up and subscribe to our ever-growing channel. Today's video is going to cover a NASDAQ 100 forecast for 2022. Enjoy. Okay, a quick recap on 2021 first of all. It was another extremely bullish year for Wall Street. The NASDAQ 100 gained 27.5%, which was the second highest gain for US indices, just below the S&P 500. Why was this? Well, the gains were driven by strong corporate earnings, economic activity was picking up speed throughout the year, but more importantly, it was that historic fiscal stimulus that we saw in the economy, which were really propping up stock markets. People were calling it a stock market bubble. It was ready to burst. Inflation wasn't seen as a huge issue then, and it was actually kind of disregarded, I think, as just transitory, which no one really knew what that meant. As we start this year, it's clear inflation will be a lot more persistent than that. This moves us on really to 2022 catalysts, and at the time of recording this video, the Federal Reserve has acknowledged their previous policy errors in quite a humble way actually, and Jerome Powell has said the interest rate hikes are coming soon, i.e. I think it's going to be March. That of course is because inflationary pressures are running seriously high, in fact at 4-decade highs. Mr. Powell also dodged questions on whether they would hike in successive meetings this year, which to me opens up the room for more hawkish conferences in the future. So I think this is something to look out for. These sorts of conditions though are quite damaging for risk assets, which we've seen at the start of this year already. Such as the stocks that we see in the NASDAQ 100. Of course, throughout the year, you should be monitoring company earnings, sales and margins for the biggest firms in the index. This includes your Apples, Microsofts, Googles, Amazons, Facebooks. You'll find that the outlooks for these companies are still bright, and most of the market gains are always down to these big five firms. With that being said, I do think there is a case for a shift from growth stocks like these to more value stocks. But as a rule of thumb, I've said it before, it's tough to bet against Wall Street in the long term. Earnings for these companies are likely to be strong throughout the year. I think Tesla is the most recent success. So listen out to those quarterly earnings. Now, just an overall picture of my 2022 prediction. Can we expect a similar performance to 2021? No, not in my opinion. The market grew 27.5% in 2021, as I've said, and just like it was for the S&P 500, driven by low interest rates, massive amounts of stimulus, and unless the financial conditions in the economy become tight, which they won't, kind of just tighter than what the record-breaking figures were that we've seen previously, I guess the million-dollar question here is how much of these hikes are already priced in. Once it is priced in, I'm expecting a really strong bounce back for the NASDAQ maybe in the second half of 2022. And this is because tech stocks for me are still the strongest and safest investment. And to conclude, as I said, I believe the first half of 2022 will be difficult for the NASDAQ. However, once rate hikes are priced in, discount hunters are going to be piling back into the market. And this is still an extremely bullish index. Let's take a look at that chart and mark some trades for this year. Taking a look at this NASDAQ 100 chart now. I'm on the chart as you can see, and you can see this really big sell-off. And when I've marked previous, I've kept some of my drawings in from my last forecast video, and I did think that we were going to see a situation where we actually broke below this swing low that we had here at 1550, maybe a slight retest and a fall down. I didn't expect it to fall this far down. I only put my line to the 200-day moving average because the last time the chart traded below this 200-day moving average was all the way back in March 2020, which is obviously during the height of the pandemic. Now then, where are we going from here? Because this is just really, really interesting. It doesn't look great on the chart, I can't lie. But I'm still fairly confident that this market is going to is going to go up and test around this 17,500 level, which is going to be my 2022 take profit, probably around an 8% gain from the 2022 open price. So yeah, we are experiencing a bit of downside at the moment. When we look at the bear case, we do have quite a clear BOS, which is a break of structure to the downside, which has broken this swing low, which was holding since October. We've broken to the downside. The RSI indicator is in oversold territory for the first time since the pandemic. But you can see what happened in a drop like we saw in the pandemic. Even though it's hard to relate, you can see that the market does tend to just snap back. So a drop that we've seen so far, if I actually get my info line from where we dropped from the highs, a drop of around 17% is bordering on a bit of a crash. 10% is mainly a correction. So I do think we're at discount levels at the moment. And if you was going to be really aggressive and you actually wanted to enter the trade now, then you could enter the trade right as we speak. And I'd put my stop loss maybe down at around the 2021 open price, just below. If you want to target that 17,500 for 2022 and hold a real swing position, maybe I'm going to put 2% on this. We're looking at around a 2.7 risk reward. If you wanted to be a bit more cautious, I do think that for the first half of 2021, we may start to see a move towards that 200-day moving average, but with inflation at kind of 4-decade highs and also interest rate hikes being quite prominent and quite aggressive, I do think we're going to see a retest of at least these swing lows down at around 13,700. If we break below there, then we may be looking towards 13,000 as the 2021 open price before we start to see its RSI indicator start to top up quite nicely. There is no need to panic in this market. I'm not interested in selling the market, that's for sure, because that's proven ridiculously difficult. Where do you actually get out? There's no logical place to get out. We're already dropped 17%. So unless you think we're going to go be testing these 2021 open prices, if you're really bearish on this stock, but for me, I'd rather sit and wait for the market to actually form a bit more structure around where you see these wicks at the moment, because as you can see, we're having massive swings around these levels. If we start to form a bit of a base here and we actually break the structure here at around 14.6, then we can look for some buys. But overall, my overriding factor is we're actually going to break the highs of around 16,700, 800 by the second half of the year, and I do think this stock will end in the green, and I think it will be a moderate 7 to 8% gain. But very interesting breaks of structure, very interesting downfall. Alternatively, of course, I'm completely wrong, and we are in a massive tech stock bubble, and we're going to see a bit more of a crash down towards something like 12 below the 2021 open price. But let's see. That's it really for the forecast video for the NASDAQ for 2022. Some really interesting moves, I'm sure, for this year. If you've enjoyed this video, make sure you've given it a thumbs up, subscribe to the channel, drop those comments in the comments section as well. I'll be really interested to hear your thoughts on where you think this stock market is going. Where is Wall Street going in 2022? Is this a big overreaction or not? Let me know what you think, and take care, and I'll see you all for the next forecast video. Cheers.